Hey, what's going on, guys? So today what I'm doing is I'm creating a small cap high yield finance portfolio. All right. And so what I'm going to do is I'm just going to run through how I quickly go through and analyze companies to, pull out the good from the bad. So the first thing is what you're looking at is Morningstar.com, and I'm using their stock screener. All right. So what we're going to do is we're going to choose financial services as our sector. The market capitalization we're going to do the smallest possible, 250 million. And then we're going to go down here to the bottom, and we're going to choose dividend yield of 6% or more. All right. And now I'm going to filter all of this by market cap because, again, like I said, I want to start with the smallest companies first. Now, I've already gone through the first page and half of the second page, so we're just going to skip down and see. Left off at Vert. Here we go. All right, so the first thing I do is when I see a stock, I go out to Google and I want to make sure that this is not an ADR or a pink sheet or over the counter type of stock, because if I own this thing, I want to actually own it, right? So this one is not. This one is on the NASDAQ, as is most of these. All right, so we're going to click on this. And the first thing I'm going to look at is just the PE ratio, the price to book, price to sales. And so far, most of the price to sales have been very high. The price to book has been about, zero point 0.9, 1. And this one seems to be completely off the scale. So PE is 18, price of sales is 0.98, price to book is 15. That tells me that balance sheet is really small. So Virtue Financial is a technology-enabled market maker and liquidity provider to the global financial markets. It generates revenue by buying and selling large volumes of securities and other financial instruments and earning a small bid-ask spread. This is really interesting. This is the company that basically makes the exchange work. All they do is they buy and sell large quantities of stock for people like Scott Trade and TD Ameritrade and E-Trade, and all they get is that little difference between the bid and the ask. So I'm sure that has a lot to do with why their balance sheet is so off. So the first thing I'm going to do is I'm going to look at net income. And this one appears to be a very new company. So net income is good. What I'm looking for are negative numbers, okay? As long as they're positive, I'm not worried so much about what the ratios are right now. I'll do that later. So net income is good. That's all positive. The capital spending and cash flow, again, we want to see some positive numbers. A lot of the companies in this small cap finance sector don't have any capital spending, and so their free cash flow is negative. So that's normal depending on the industry. All right, next what we're going to do is we're going to take a look at the balance sheet. All right. Now, the balance sheet, what we're looking for is total assets to total liabilities. We want the liabilities to be half of the assets, okay? And looking at this thing, as you can see, total liabilities are more than half, more than half, more than half, more than half. So we're going to call this one a flunk, okay? This is an F grade for the balance sheet. We don't like this one. But just for fun, let's go down and let's take a look at the dividend payout and what that has been over the past. And so we see here, see this 2%, it's only 6% now. It's very possible that this 6% is an accident, okay? So that's not what we're looking for. What we want is we want something that consistently pays a high dividend yield above 6% every year. So that's not a good one. Let's go down to the next one. All right, next one is AZIHF. Let's type that in here, AZIHF. See, this one I think is going to be, yeah, this is over the counter, so that's not good. All right, next one is APAM. All right, this one is on the NYSE, so that's a good one. Let's take a look at this thing. All right, first things first, we're looking at, uh-oh, there we go. We're looking at the PE 18, price of sales 1.5, price to book 17. My goodness, these things are high. See, Artisan Partners Asset Management Inc. is an investment management firm that provides a broad range of U.S., non-U.S., and global equity investment strategies. So this is going to be a straight up investment company. And that book to price ratio is probably high because these guys may be levered, or maybe they're not levered at all. But their price is high. So net income is good. Got positives there. I'm concerned that I'm not seeing all of the years because I have the screen blown up for your benefit. But I'll go back and look at that after. Cash flow looks good. All right, so let's look at the balance sheet. You know what? Yeah, every time I go to a new page, the zoom goes away. I may need to keep this open. All right, so again, we're looking at total assets to total liabilities. Yeah, look at this. See, 225 assets, 889 liabilities, 288. Yeah, that's not what we're looking for. That's not what we're looking for at all. So we're going to call this one a flunk as far as balance sheet goes. Just for fun, let's take a look at the dividends. Yeah, high yield, I'd say. All right, let's go back and check out the next one. Next one, AZIHY. Pretty sure this one is going to be over the counter. Let's just make sure. I would really hate to skip a great stock. Yep, okay, over the counter. All right, next one is Man Group. That is an ADR. We don't want ADRs. Next one is Ashmore Group. Again, this is a 5 letter, so pretty sure it's going to be Pink Sheets. Let's see here. Yep, Pink Sheets too. All right, let's keep going here. All right, FS Investment Corp. That one looks good. Let's just double check. FSIC. All right, that one's good. That's on the NYSE. All right, let's take a look at this thing. It's taking a while. All right, here we go. So, PE 14.9, price of sales 6.9, price of book 107. Not bad. That price to book, that scares me. All right, FS Investment Corp is externally managed, non-diversified, closed-end management investment company. Its portfolio is comprised of investments in senior secured loans and second lien secured loans of private middle market U.S. companies. And that's typical of these small cap finance stocks. A lot of them deal in debt securities. But a lot of the companies that I looked at on the first page, they didn't have such high price to book ratios. So that's a bit concerning. But net income looks good. Free cash flow looks good. Again, you know, these companies aren't going to have a lot of capital expenditure, so that throws off those numbers a bit. All in average, it looks good. All right, kept the size on this one. Okay, balance sheet. Let's see where we are. Total assets 2144, 645. That looks good. All right, let's scroll here. 445. Yeah, so see, it's good. That's half. So we're gonna definitely add this one. That one is FSIC. All right, let's take a look at one more. MMI Holdings. I'm pretty sure this is gonna be Pink Sheet stock. Over the counter. Now I've been in the market for a long time. I've never invested in any over the counter market stocks because there's a lot of restrictions as to how much you can buy and when you can buy and stuff like that. Also too, a lot of the over the counter stocks don't have a lot of liquidity. So what that means is that when you are ready to sell, you're going to have a heck of a time doing so. And even buying into the stock sometimes has a really large gap between the price and the ask price. And so that's where that company comes in that we saw before. All right, so we're going to go ahead and skip these first four because pretty sure, again, these are going to be over the counter. So BGCP is the next one here, and that's on the NASDAQ, so that's a good one. Let's take a look at this one here. All right. Oh, not yet. All right, there we go. All right, first things first. Dividend yield's kind of small, 6%. PE 17, price to book 3, price to sales 1. It looks a lot better. Smaller dividend, which makes sense. So BGC Partners Inc. is a brokerage company servicing the wholesale, financial, and real estate markets. Some of its products include fixed income securities, interest rate swaps, foreign exchange equities, equity derivatives, and structured products. So this is going to be your typical hedge fund type investment company. These guys are dealing strictly with financial companies and real estate companies, it seems. So let's take a look and see what we're doing here. All right, net income, decent, can't complain, all positives. But I am certain now that I'm not able to view the other years here because I've blown up the screen. So I'm gonna have to go back and look at that after the video. Capital spending is up and down. I don't like that. I really don't. But it's really hard to judge this particular company based on all of the other companies in the small cap finance sector because, again, like I said, a lot of them either don't have capital spending or there's just not a lot going on there. So anyway, let's move on to the balance sheet. All right. Let's take a look here. Total assets 14. Oh no, 1016, 13, 2016, 2000. No, that is a fail. No, we don't like that. We don't like that. So we're gonna have to pass on this one. Let's go back. All right, so what I'm gonna do is I'm gonna finish all of these. I'm actually doing all 11 sectors of the economy. I have basic materials and consumer cyclicals done. So I'll finish finance and then I'll have 8 others to complete. But what I'm gonna do is once I pull out the good from the bad, then I'll pull the price histories, I'll pull the financial ratios and calculate those. I'll score these and then I'll figure out, then I'll do some back testing and then I'll figure out allocation for the best of the best in each sector. All right, have a good one.